Hi guys, today we'll be reviewing and analyzing where the Sp500 might be heading into and what the asset managers, so the institutions and the leverage funds are doing. To do so, I will be reviewing and analyzing the CUT report, which is released every Tuesday. Okay, so in the upper section we see a daily chart, naked price with the resistances and supports, while beneath I've plotted the CSO-A bands. CSO-A bands obviously are based on the historical volatility. So what we see here, actually, the last few movement we've seen here, once the price has crossed above the upper CSO-A band, we've triggered a great short, okay? And here we have actually covered that short. Right now, so what the CSO-A band is telling us. Here, as you can see here, the derivative is positive, which means the channel is oriented upwards. That means, in other words, that the probabilities to see the Sp500 moving in a positive territory is actually bigger, larger than the possibility to see the Sp500 moving down. Actually, where we might see the movement heading into. So here the upper band is around 3,060 points, and if we analyze, okay, in the upper section the price, we see here a resistance area around 3,044, okay, 3,040 points. But this is the daily chart. So if we want, actually, I'm very bearish. Before triggering a short, I want to be sure that, okay, the price hit the upper band. So this is the daily chart, but let's move to analyze the weekly chart in order to try to detect a great point where we could entry our short. Okay, so actually, while the CSO-A bands are oriented positively in the daily chart, we see here that the cycle, okay, for the weekly chart is oriented downwards, okay, which is an extremely important signal if we want to trigger a short. So where the upper band is passing by, okay, here we see 3,100 points. As well here, if we analyze, okay, the oblique resistance in the weekly chart, we see here the resistance passing by at 3,100 points. So, in conclusion, as I always say, it is important to have clear ideas where we should trigger our long or short, and the analysis should be always as simplest as possible. Okay, so let's have a look at what happened in the past with the CSO-A bands on the weekly chart. Okay, here we've seen actually a short around 2008 points and 800 points, and we've seen here actually closing here around where the price also hit the lower bands, so 3 points lower. Okay, again a new long here to actually close this long around this area. So as you can see here, it seems to be a very powerful instrument. So now, again, while we see the CSO-A bands moving downwards, which means that the derivatives is below the zero, okay, so it's suggesting us to short the Sp500 once, okay, the price will hit or will approach the upper band. Okay, the daily chart we've seen a movement up. Yet a great opportunity for us to trigger a short will be around this area, so between 3,040, so 3040 and 3,100. I don't believe we're going to go down exactly from this area. So from actually on Friday we've seen the closure at 2,950 points. So I do believe there is still space, there is still room for a movement upwards. Now let's move and let's see what the institutionals are doing, okay? And in order to do so, we will be analyzing the CUT report, which has been released on Tuesday. So here we have the long and the short positions. So what we see here for the asset managers, so for the institutionals, we see that they have decreased their longs, okay, and they've increased the short. Actually, they are betting that over the next weeks, probably, this Sp500 might go lower. But then we will see a big difference between the asset managers and the leverage funds. So what the leverage funds are doing here, we we experienced a decrease in the long positions, okay, so minus 3,500, and an increase in terms of shorts. So in both cases, okay, so asset management institutions and leverage funds are those called non-commercial, okay. For the non-commercial, we see that they've both increased their short position while they've decrease their long position, which is actually a very great signal that is telling us that the SP500 is doomed to go down over the next week. Yet, a very important distinction should be made, because here, in terms of absolute values, we see that the asset managers are positive. So 6 out of 10, so 60% of them, they are long, okay? Even if, as we have seen over the last week, we've experienced a decrease in terms of longs and an increase in terms of shorts. For the leverage money, okay, so for the leverage funds, we see an increase in shorts and a decrease in longs as well. But in terms of absolute value, we see that 7 leverage funds out of 10 are short. Okay, now if we see more in depth here, we will see that the black line, okay, is represented by the commercials, but we are interested in the non-commercials. Okay, so the asset manager are those ones, the azul, and as we can see here, they are above the zero. Okay, but they are decreasing their positions. Okay, they are decreasing their longs, while the SP500 has been moving up. As you can see here, the asset managers are decreasing their long positions, okay? And let's see here, the green line actually are the leverage funds. And as you can see here, the leverage funds are net negative, and they are still increasing their shorts while decreasing their longs. So in other words, as you can see here, the asset managers, so the institutionals, okay, are really often, if not always, okay, trading the right part, okay, in the trading arena. So what do we see? What we have seen here? An increase in their position, and we have experienced an increase in the SP500. Okay, then they've decreased their positions for the SP500, and here we've seen a huge the fallout that we've experienced between the mid-February, okay, and mid-March. Now what happened? They have covered the shorts and they've opened longs here, but now, okay, they followed this increasing in the SP500 percentage point. But since then, actually since May the 5th, we've seen a decrease in their position. So they are not following now the SP500 going up, which is a very important signal. Actually, it's a warning signal. So in order to arrive to a conclusion, I'm really bearish on the SP500, yet I will not trigger any short until we will be reaching at least 3050 or 3100. Thank you guys.